Mortgage rates are easing. The average 30-year fixed rate dropped to 6.58%, a 10-month low that's nudging buyers off the sidelines. What's up, Wealthy AF? Martin Perdomo here, the elite strategist. In this week's real estate market update, it's all about shifting momentum. Pending home sales are up 1.6% year over year, and Redfin's home buyer demand index is tracking tours and buying consults is ticking higher, alongside home tour activity as well. Agents report a growing confidence. Some buyers are acting now, while others still waiting for further rate drops. But make no mistake, the window is open, and it's opening even wider. For investors, low rates are reigniting demand, baby. That's right. This excites me. This really excites me. If you got acquisition capital, now's when you want to put it to work. The landscape is looking even clearer. On the supply side, there are now 36% more sellers than buyers, the largest disconnect since 2013. You heard me right. 36% more sellers than buyers, the largest disconnect since 2013. Sellers are feeling the pressure. Nearly 14,000 fell off market from May to July. Okay, where's your opportunity? Your opportunity to buy is right now. There's opportunity right now. Guys, I'm making a bet that the rates are going to drop next year. I've been saying this for a while. I was hoping that they would have dropped some by now, but now for sure we know they're going to drop this last quarter of 2025. And next year, this time, we should be at least 1 point lower. That means go out, buy right, because remember, you make your money when you buy, you date the interest rate, and you marry the property. Buy now. If your property's cash flow in today's market, it's going to be a walk in the park. I already called my banker and said, hey, I have some of these loans at 7.5% commercial loans that for properties that I bought last year, 23, and refied in 24. How you guys looking? How you underwriting? So I'm already having those discussions with my lenders. I'm going to suggest that you start having those discussions as well. But the rates are coming down. She already told me that they're underwriting. It's a small community bank, but they're already underwriting with a quarter percent rate cut. Already underwriting this week, right now. This was maybe an hour ago from the time of the recording of this podcast on August 28th. So just a little insight for you, my listeners, right? I'm giving you the edge. They already are underwriting. I got another property I'm refinancing into a debt service and to a DSCR loan, which I got a rate of 6.87%. And just last month, I had refinanced a property and I got a 7.25%. So just to give you an idea, rates are coming down, which means higher cash flow. The numbers work, which in turn means higher prices. Prices will come up. It's the fundamentals. Okay, back to this. With fewer buyers committed and more and more options are available, sellers are pulling listings. Some are delaying, some decided to rent out instead. Again, if you're a buyer in the market, this is an opportunity for you to go out there and make your offers. And sometimes you'll be able to get away with not so much respectful offers right now because they're just not getting any action. But that's going to tilt soon. I believe by next spring, the market will change and we'll be in a hot market again. The balance has tilted, my friends. This is not just a cooling market. It's a strategic opportunity. Drop in with structured offers and creative funding, and you're likely to negotiate better terms. So, like I mentioned a moment ago, there's opportunities right now for creative finance deal, opportunities right now to buy right at a lower price. And just even if you make less cash flow, then you go next year and refi it. That's the strategy I'm teaching my students right now, is to buy right, make sure you underwrite conservative now. Because think about it, guys. If the numbers make sense today with 7.5% interest rates, what will it be? How will that property cash flow in 2 years from now when the rates are 5.75? Quote me on that. I believe we're going to level off between 5.25% and 5.75% interest rate. That's a fair number. I think at that number, the economy stays steady. You know, money is not super cheap. Money is not super high, but that's a good number. Quick summary. The mortgage rates are easing, buyers are creeping back, seller activity is pulling back, inventory remains, but bargaining room grows. If you've lined up funding and have a clear underwriting model, the scales are tipping in your favor, my friend. If you want to stay up to date with these shifts in real time and get first access as my book launch approaches, make sure you're following me on IG, on Instagram, TikTok. I'm on TikTok now, guys, so make sure you go follow me over there. I'll follow you back. And YouTube at Elite Strategist. I'm sharing behind the scenes insights, deal breakdowns, and strategies that don't make it into the headlines. That's this week's real estate market update. Be strategic, be early, and be elite. Stay focused. The future looks bright. Peace out.